Question 1. Which of the following is an example of a managed care plan? A. High deductible health association. B. Health maintenance organization HMO. C. Catastrophic health plan. D. Short-term health insurance. Answer B. Health maintenance organization HMO. Explanation. A health maintenance organization HMO is a type of managed care plan. It emphasizes preventive care and offers coverage for a range of health services through a network of providers. HMO members are typically required to choose a primary care physician (PCP) and get referrals from the PCP to see specialists. Managed care plans are designed to reduce healthcare costs and improve quality through the coordination of care and the use of network providers. The other options listed are not types of managed care plan. These are high deductible plans. Catastrophic plans provide coverage for worst-case scenarios, and short-term health insurance typically offers limited duration coverage with fewer benefits. Question 2. Mr. Anderson is enrolled in a POP and receives a recommendation from his doctor to see a specialist. However, Mr. Anderson is considering seeing a specialist who is out of network to receive a second opinion. What should Mr. Anderson consider before making his decision? A. Mr. Anderson will not be covered for out-of-network services and he should choose a different specialist within the PPO network. B. Mr. Anderson will have to pay the full cost of the out-of-network specialist but can still submit the bill for reimbursement. C. Mr. Anderson can see the out-of-network specialist and will only pay a higher coinsurance rate compared to seeing an in-network specialist. D. Mr. Anderson must seek approval from the insurance company before seeing any out-of-network specialist. Answer C. Mr. Anderson can see the out-of-network specialist and will only pay a higher coinsurance rate compared to seeing an in-network specialist. Explanation. PPO, Preferred Provider Organization, plans offer greater flexibility than HMO plans, including the option to see out-of-network specialists. However, there is typically a higher coinsurance rate for out-of-network services, and the insurer may cover a smaller portion of the costs compared to in-network care. PPO members are not required to get referrals for specialist visits, but they are encouraged to use in-network providers to minimize out-of-pocket costs. While PPO members can see out-of-network specialists, they will incur higher costs and may have to pay a larger portion of the bill than if they chose an in-network provider. Question 3. Which of the following is not a key provision typically found in a health insurance contract? A. Insuring agreement. B. Premium calculation formula. C. Exclusions and limitations. D. Riders and endorsements. Answer B. Premium calculation formula. Explanation. The premium calculation formula is generally not a key provision in the health insurance contract itself. Instead, premium rates are determined by underwriting factors such as the applicant's age, health status, and plan type. The key provisions typically found in a health insurance contract include the insuring agreement, which outlines the coverage the insurer is providing, exclusions and limitations, which specify services or situations not covered, and riders or endorsements, which modify the original policy, adding or excluding specific coverage. The premium amount is specified, but the detailed formula used to calculate it is not usually part of the insurance policy's main provisions. Question 4. Under the Affordable Care Act, which of the following is not considered an essential health benefit? A. Maternity and newborn care. B. Mental health and substance use disorder services. C. Cosmetic surgery. D. Prescription drugs. Answer C. Cosmetic surgery. Explanation. Under the ACAP, essential health benefits are a set of health care service categories that must be covered by certain plans, including individual and small group health plans, a maternity and newborn care, mental health and substance use disorder services, and prescription drugs are all considered ABEs. However, cosmetic surgery is not an essential health benefit as it typically falls outside the scope of coverage unless medically necessary due to injury or illness. ABEs are designed to ensure that individuals have access to the most essential health services without excessive out-of-pocket costs. Question 5. Which of the following best describes the underwriting process in health insurance? A. Assessing the risk of the applicant and determining their premium based on medical history. B. Ensuring that claims are processed quickly and efficiently. C. Reviewing policyholder grievances to determine the outcome. D. Identifying fraud and investigating claims for suspicious activity. Answer A. Assessing the risk of the applicant and determining their premium based on medical history. Explanation. Underwriting in health insurance is the process through which insurers evaluate the risk posed by an individual or group applying for coverage. The primary purpose of underwriting is to assess the applicant's health history, lifestyle factors, and other relevant information to determine their risk level and ultimately their premium. This helps the insurer set appropriate rates and ensure they are covering individuals in a financially sustainable manner. Options B, C, and D refer to other aspects of the health insurance process, such as claims handling and fraud detection, which are not part of the underwriting function. Question 6. Mrs. Taylor is a 60-year-old woman with a pre-existing condition. She applies for health insurance under a plan governed by the Affordable Care Act account. How will her pre-existing condition impact her coverage under the account? A. Her pre-existing condition will result in a higher premium due to account regulations. B. Her pre-existing condition will prevent her from being eligible for health insurance coverage under the account. C. Her pre-existing condition will not impact her coverage, as the account prohibits discrimination based on pre-existing conditions. D. Mrs. Taylor will have to wait 6 months before her pre-existing condition is covered under the account. Answer: C. Her pre-existing condition will not impact her coverage, as the account prohibits discrimination based on pre-existing conditions. Explanation: one of the key provisions of the Affordable Care Act account is the prohibition of discrimination based on pre-existing conditions. Health insurers cannot refuse to cover an individual or charge them higher premiums because of their pre-existing medical conditions. This ensures that individuals like Mrs. Taylor, who may have health issues, still have access to necessary coverage at the same cost as individuals without such conditions. The account ensures a level of protection for individuals with pre-existing conditions, making health insurance more accessible. Question 7. Mr. Adams has a health savings account, HSA, linked to a high-deductible Helper ASG. Which of the following is not a feature of an HSA? A. Contributions to an HSA are tax-deductible. B. HSA funds can be used to pay for qualified medical expenses. C. HSA funds can be used to purchase any type of insurance. D. Unused HSA funds roll over year to year. Answer: E. HSA funds can be used to purchase any type of insurance. Explanation: a health savings account, HSA, is a tax-advantaged account linked to a high-deductible health ASG that allows individuals to save money for healthcare expenses. Contributions to an HSA are tax-deductible, and the funds can be used for a variety of qualified medical expenses, including doctor visits, prescriptions, and hospital services. Additionally, any unused funds in the account roll over to the next year, unlike flexible spending accounts, FSAS. However, HSA funds cannot be used to purchase insurance plans directly except for specific types like long-term care insurance or Medicare premiums once the individual reaches age 65. Question 8. A health insurance policy includes a rider that adds coverage for vision care. What is the purpose of this rider? A. To remove certain exclusions from the policy. B. To provide additional coverage beyond the standard policy. C. To reduce the premium cost for the policyholder. D. To ensure that the insurer provides services that were previously unavailable. Answer: B. To provide additional coverage beyond the standard policy. Explanation: a rider is an amendment to a standard insurance policy that provides additional coverage or alters the terms of the original policy. In this case, the vision care rider would add coverage for eye exams, glasses, or contact lenses beyond what is covered in the base health insurance policy. Riders can be used to tailor an insurance policy to the specific needs of the policyholder, providing extra benefits for services that are not included in the standard coverage. The other options do not accurately describe the purpose of a rider in a health insurance policy. Question 9. Under Wyoming's insurance laws, what is the maximum time period for health insurance policy to apply pre-existing condition exclusion for new policyholder? A. 3 months. B. 6 months. C. 12 months. D. 18 months. Answer: B. 6 months. Explanation: Wyoming, under the guidelines set by the Affordable Care Act, generally prohibits insurers from applying pre-existing condition exclusions to health insurance policies. However, if a policy does include a pre-existing condition exclusion, it cannot last for more than 6 months. The account, which is implemented in Wyoming, limits the duration of pre-existing condition exclusions for most types of health insurance to 6 months for new policyholders. This provision is designed to provide more immediate access to healthcare coverage for individuals with pre-existing conditions. Question 10. Which of the following is A responsibility of a health insurance agent under Wyoming's insurance regulations. A. To determine the premium rates for individual policies. B. To ensure that the insured is aware of all coverage exclusions and limitations. C. To approve the insurer's claims for payment. D. To provide legal advice to policyholders regarding coverage disputes. Answer: B. To ensure that the insured is aware of all coverage exclusions and limitations. Explanation: under Wyoming's insurance regulations, health insurance agents have responsibility to ensure that their clients fully understand the terms of their insurance policy. This includes informing the policyholders about coverage exclusions and limitations. Agents must make sure that the policyholder understands the scope of coverage and any restrictions in the policy. Agents are not responsible for determining premium rates, approving claims, or offering legal advice in disputes. They serve as intermediaries between the insurer and the policyholder, ensuring that the policyholder is well informed about their coverage options and obligations. Question 11. What is the primary purpose of the Health Insurance Portability and Accountability Act, HIPAA? To regulate the costs of health insurance premiums. B. To ensure that health insurance companies do not discriminate based on pre-existing conditions. C. To protect the privacy and security of individuals' health information. D. To standardize the benefits offered by health insurance plans. Answer: C. To protect the privacy and security of individuals' health information. Explanation: the primary purpose of HIPAA is to protect the privacy and security of individuals' health information. HIPAA establishes strict rules for how healthcare providers, insurers, and other covered entities handle and protect sensitive health data. While HIPAA also contains provisions related to the portability of health insurance coverage, its main focus is on safeguarding patients' health information from unauthorized access and ensuring that individuals' medical details remain confidential. Question 12. Which of the following is an example of a mandatory benefit that health insurance policies must cover under the Affordable Care Act? A. Chiropractic care. B. Cosmetic surgery. C. Maternity and newborn care. D. Weight loss surgery. Answer: C. Maternity and newborn care. Explanation: under the ACA, maternity and newborn care is considered one of the 10 essential health benefits aids that must be covered by all non-grandfathered health plans. This includes coverage for labor and delivery, as well as care for newborns, while the services like chiropractic care or weight loss surgery may be offered by some plans. They are not mandatory benefits under the ACA. Question 13. Mr. Thompson is enrolled in a health insurance plan with a $500 deductible and a 20% coinsurance requirement. If Mr. Thompson has a medical bill of $3,000, how much will he be required to pay out to pocket? A. $500. B. $700. C. $1,000. D. $1,400. Answer: B. $700. Explanation: to calculate Mr. Thompson's out-of-pocket costs, we need to consider the deductible and the coinsurance. First, Mr. Thompson must pay the $500 deductible. After that, he will need to pay 20% of the remaining $2,500, the amount above the deductible, which is $500. So his total out-of-pocket costs are $500 deductible plus $500 coin through equals $100. Question 14. Which of the following is an example of a flexible spending account, FSA expense? A. Health insurance premiums. B. Routine dental care. C. Over-the-counter medications without a prescription. D. Long-term care insurance. Answer: B. Routine dental care. Explanation: flexible spending accounts, FSAS, allow employees to set aside pre-tax money to pay for qualified medical expenses, such as routine dental care. FSAS can be used to cover expenses like dental checkups, fillings, and certain medical procedures. Health insurance premiums, over-the-counter medications without a prescription, and long-term care insurance are typically not eligible expenses under an FSA. Question 15. Which of the following health insurance policy types is designed to provide coverage for major medical expenses such as hospitalization, surgery, and specialized treatments? A. Short-term health plans. B. Major medical insurance. C. Dental insurance. D. Vision insurance. Answer: B. Major medical insurance. Explanation: major medical insurance is a comprehensive health insurance policy that provides coverage for A wide range of medical expenses, including hospitalization, surgery, and specialized treatments. This type of insurance is designed to protect individuals from catastrophic medical costs. Short-term health plans may offer temporary coverage but are generally less comprehensive, while dental and vision insurance cover specific health needs rather than major medical expenses. Question 16. Under Wyoming's health insurance regulations, which of the following is true regarding the renewal of individual health insurance policies? A. Insurers are not allowed to refuse renewal for individuals based on their health status. B. Insurers can refuse renewal for individuals if they have pre-existing condition. C. Insurers can increase premiums significantly for individuals over the age of 50. D. Insurers are required to offer new policies to individuals once their current policy ends. Answer A. Insurers are not allowed to refuse renewal for individuals based on their health status. Explanation. Under Wyoming's health insurance regulations and consistent with the Affordable Care Act, insurers cannot refuse to renew an individual's policy based on their health status or pre-existing conditions. This ensures continuous coverage and prevents insurers from discriminating against individuals with health problems. Insurers may adjust premiums based on factors such as age, but they are not permitted to refuse renewal outright based on health issues. Question 17. Which of the following describes the main feature of a preferred provider organization (PPO) health plan? A. The insured must choose a primary care physician (PCP) and get referrals for specialists. B. The insured must use network providers but can go outside the network for an additional cost. C. The insured is only covered for in-network services. D. The insured is limited to a specific network of providers and must stay within that network. Answer B. The insured must use network providers but can go outside the network for an additional cost. Explanation. A preferred provider organization (PPO) health plan provides flexibility by allowing individuals to see any doctor or specialist, though they save money by using providers within the PPO network. If the insured chooses to go outside the network, they can still receive coverage but will typically pay higher out-of-pocket costs. This plan differs from health maintenance organization (HMO) plans, which require a primary care physician (PCP) and referrals for specialists. Question 18. Under the Affordable Care Act, which of the following groups is eligible for Medicaid expansion? A. Individuals under the age of 18. B. Individuals whose household income is below 138% of the federal poverty level. C. Individuals who are pregnant or recently gave birth. D. Individuals with employer-sponsored health insurance. Answer. B. Individuals whose household income is below 138% of the federal poverty level. Explanation. Medicaid expansion under the Affordable Care Act is designed to provide coverage to low-income individuals, specifically those whose household income is below 138% of the federal poverty level. This expansion allows more individuals, including adults without children, to qualify for Medicaid, which provides health coverage. Pregnant individuals and children may also qualify for Medicaid, but they do not fall under the specific provision of Medicaid expansion, which focuses on low-income adults. Question 19. In a health insurance policy, what is the coinsurance feature? A. The amount the policyholder pays before the insurance kicks in. B. The percentage of the medical bill that the insurance company covers. C. The amount the policyholder is responsible for after the deductible is met, usually expressed as a percentage. D. A flat fee that the insured must pay for each doctor's visit. Answer. C. The amount the policyholder is responsible for after the deductible is met, usually expressed as a percentage. Explanation. Coinsurance is the percentage of the medical bill that the policyholder must pay after meeting the deductible. For example, if a policy has a 20% coinsurance requirement and the insured incurs a $1,000 medical bill, they would pay 20%, $200 of the bill, while the insurance company would cover the remaining 80%, $800. Coinsurance helps share the cost of medical expenses between the insurer and the insured after the deductible has been met. Question 20. Which of the following types of health insurance policies typically covers only catastrophic events, such as major accidents or severe illnesses? A. Basic health insurance. B. Catastrophic health insurance. C. Major medical insurance. D. Short-term health insurance. Answer. B. Catastrophic health insurance. Explanation. Catastrophic health insurance is A policy designed to provide coverage in case of major health emergencies, such as severe accidents or critical illnesses. This type of insurance generally has low premiums, but high deductibles, and it is intended for young, healthy individuals who want to protect themselves against significant medical expenses without paying for a full comprehensive policy. It covers essential health benefits after the deductible is met, but it is limited to catastrophic situations, making it different from more traditional forms of health insurance. Question 21. Which of the following is typically a requirement for obtaining a Medicaid policy? A. Being employed full-time. B. Having the household income below a certain threshold. C. Owning property valued above $200,000. D. Being a member of a specific religious group. Answer: B. Having a household income below a certain threshold. Explanation: Medicaid is a joint federal and state program that provides health coverage for low-income individuals and families. To qualify for Medicaid, individuals must have a household income below a specific threshold, which varies by state. Other factors, such as age, pregnancy, and disability status, may also impact eligibility, but being employed full-time or owning property above a certain value typically does not disqualify someone from Medicaid. Question 22. What is the primary function of a health maintenance organization, HMO? A. To provide flexibility for insured individuals to choose providers outside the network at a low cost. B. To offer comprehensive coverage for all types of medical services. C. To require insured individuals to choose a primary care physician, PCP, and get referrals for specialists. D. To provide financial assistance for out-of-pocket medical expenses only. Answer: C. To require insured individuals to choose a primary care physician, PCP, and get referrals for specialists. Explanation: Health maintenance organizations, HMOs, are health insurance plans that require insured individuals to select a primary care physician, PCP, who coordinates their care. If specialist care is needed, the PCP must provide a referral. This structure helps control costs and ensures that medical services are provided within a defined network of doctors and hospitals. HMOs tend to have lower premiums but less flexibility compared to POS. Question 23. Under the Affordable Care Act, which of the following is considered an essential health benefit? A. Acupuncture. B. Infertility treatments. C. Maternity and newborn care. D. Weight loss surgery. Answer: C. Maternity and newborn care. Explanation: Under the Affordable Care Act, essential health benefits aims are a set of 10 health care service categories that must be covered by all non-grandfathered health insurance plans. Maternity and newborn care is one of these essential health benefits. Other services like acupuncture, infertility treatments, or weight loss surgery are not mandatory aids under the account. Question 24. What is a characteristic of a high deductible health PHP? It offers a higher premium in exchange for lower out-of-pocket costs. B. It has a low deductible resulting in lower out-of-pocket costs. C. It offers higher out-of-pocket costs but may be paired with a health savings account, HSA. D. It requires a primary care physician for referrals to specialists. Answer: C. It offers higher out-of-pocket costs but may be paired with a health savings account, HSA. Explanation: High deductible health PCHE are health plans with higher deductibles and lower premiums. While they require individuals to pay more out-of-pocket before insurance coverage kicks in, they often can be paired with a health savings account, HSA. HSA allows individuals to save pre-tax money for medical expenses, helping offset the higher deductible costs. Question 25. Which of the following is an example of a covered service under Medicare Part A? Prescription drugs. B. Routine dental care. C. Hospital stays. D. Preventive services. Answer: C. Hospital stays. Explanation: Medicare Part A covers inpatient hospital stays, skilled nursing facility care, hospice care, and some home health care. Prescription drugs are typically covered under Medicare Part D, while routine dental care and preventive services are not fully covered by Medicare unless specific conditions are met. Question 26. What is the purpose of the Affordable Care Act's individual mandate prior to 2019? A. To provide subsidies for low-income individuals. B. To require all Americans to have health insurance or face a penalty. C. To increase the availability of employer-sponsored insurance. D. To limit the cost of out-of-pocket medical expenses. Answer: B. To require all Americans to have health insurance or face a penalty. Explanation: Prior to 2019, the Affordable Care Act (ACA) included an individual mandate that required all Americans to obtain health insurance or pay a penalty when filing their taxes. The goal of this mandate was to ensure that everyone had access to health coverage, which in turn helped to lower the overall cost of insurance by ensuring a diverse pool of policyholders. This mandate was repealed in 2017, but it remained in effect until 2019 for most states. Question 27. Under typical health insurance plan, what is a copayment? A. The total amount the insured pays for a covered service. B. The amount the insured must pay before the insurance company begins to cover costs. C. A fixed amount the insured pays for a specific service like a doctor's visit. D. The percentage of medical expenses the insured must pay after the deductible is met. Answer: C. A fixed amount the insured pays for a specific service like a doctor's visit. Explanation: a copayment or copay is a fixed amount that the insured pays for a specific health care service such as a doctor's visit or prescription medication. The copay is typically due at the time of the service, and the remainder of the cost is covered by the insurance company. It differs from coinsurance, which is percentage of the cost, and from deductibles, which are the amount paid before insurance kicks in. Question 20. What type of health insurance plan allows the insured to see specialists or out-of-network providers without a referral? A. Health maintenance organization, HMO. B. Preferred provider organization, EPO. C. Point of service, POS. D. High deductible health, HEC. Answer: B. Preferred provider organization, PPO. Explanation: a preferred provider organization (PPO) allows insured individuals to see specialists or out-of-network providers without needing a referral, while using in-network providers results in lower out-of-pocket costs. PPO plans offer more flexibility in terms of choosing healthcare providers compared to health maintenance organizations (HMOs), which require referrals from a primary care physician. Question 29. Under the Affordable Care Act (ACA), how long can a young adult stay on their parents' health insurance plan? A. Until age 18. B. Until age 21. C. Until age 26. D. Until age 30. Answer: C. Until age 26. Explanation: under the Affordable Care Act (ACA), young adults can remain on their parents' health insurance plan until they turn 26 years old. This provision helps ensure that young adults have access to health insurance coverage as they transition from adolescence into adulthood, including during times when they may be in school or starting their careers. Question 30. What is the key difference between a health savings account (HSA) and a flexible spending account (FSA)? An HSA can only be used for dental expenses, while an FSA covers a broader range of expenses. B. HSA funds roll over year to year, while FSA funds do not. C. FSAs are available only through employers, while HSAs are available to anyone. D. HSA funds can be used for cosmetic surgery, while FSA funds do not. Answer: B. HSA funds roll over year to year, while FSA funds do not. Explanation: a key difference between health savings accounts (HSAs) and flexible spending accounts (FSAs) is that HSA funds roll over from year to year, meaning individuals can accumulate savings over time. In contrast, FSA funds typically do not roll over and may expire at the end of the plan year. Although some plans offer a grace period, HSAs are also generally available to individuals with high deductible health plans. HSAs or employer-sponsored.